Welcome everybody to our JobKeeper webinar. Hopefully everyone can hear me. Just a little bit of housekeeping to start with. So if you've got a question, there's a Q&A button just down the bottom of your screen. If you can just click on that and just fire away with any questions you have, and we will do our best to answer them as we go. On the panel today, we've got Tom Warner, who is our in-house expert on everything JobKeeper related, and Beck Pauly, who is one of our bookkeepers here at Lincoln's. Now, we haven't really prepared any frequently asked questions. We've kind of left it up to the attendees to ask us what you need to know. So we will just go with what we've got. So first up, we've got a question from Kate that says, how do we know if we have been accepted for JobKeepers? Who wants to answer that? Tom?
Yeah, so you won't actually get any notification from the tax office that you've been accepted for JobKeeper. You will do the self-assessment, you'll enroll online, and from an agent point of view, we can see that someone has enrolled, but there is no notification from the tax office because it is a self-assessment process. So once you've assessed and applied, you're into the JobKeeper program. Hope that helps, Kate.
Okay. Before we go into the next question, we're just going to pop up a little poll just to see who has successfully enrolled for the JobKeeper, if you want to do that. Okay, our next question is from Peter. Well, he's got three questions. Okay, is the staff who is casual with more than 1 year with the organisation but opted not to work due to the COVID-19 eligible for the JobKeeper payment? The reason given for not coming to work is the fear of contracting coronavirus and passing it on to the family members at home. Okay. Tom, do you want to answer that one?
With that one, Peter, where you've got an employee who is a casual employee but has been with the organisation for more than 12 months, where they've either been stood down or are taking leave without pay due to concerns for their own health and family wellbeing, they'd still be eligible employees for the JobKeeper program. So they would need to be enrolled and paid the minimum $1,500 a fortnight throughout the program.
Yeah. So if the casual employee who commenced work on the 2nd of March 2019 eligible for JobKeeper payment, unfortunately they had to be on for 12 months or more. So unfortunately you're a day out, which would mean that they wouldn't be eligible with the strict rules on that one.
What it is worth checking though for that is when they did actually start. So sometimes you've got an employment contract that says you've started on a certain date, but they may have started doing work prior to that. So they may have started reviewing their role, getting inducted, some training and that sort of things. That could qualify them potentially as being commenced on that date, but it's worth checking.
Yep. So Xero has got some really great features, which will answer your next question, Peter. Beck, did you want to go through just how Xero helps with the JobKeeper payment?
Sure. So you do need to enrol, well, under my understanding, you do still need to enrol through the business portal with the ATO. But with Xero, then you can report your JobKeeper payments through to the ATO. They've already set up a payroll category for you, and you can report when your employees started being eligible. It's a really easy process with Xero.
Yeah. Okay, so Tina's got a question regarding their small PNC. So the PNC employs a canteen lady. Sorry, my screen's just moved. Okay, and it was to ask whether you've still got to find extra hours given that they're going to be having the 1,500. Tom, did you want to answer that one?
Yep, so where you've got an employee who's now receiving more than what they were the hours that they were working for, there is no obligation on the employer to find more work for that person. or to force them to have more work for that person. So potentially you'll be paying somebody to be working the hours that they're working before, but at a much higher rate. Jenny, is there any other HR things on that one that you can think of?
Jen's just going to pop in.
Hi, everyone. No, I think you've covered that well, Tom.
Cool. Nice social distancing there. Thanks, Jen. Okay. Okay, John's got a question. Is there indication of whether contractors that are largely occupied in this company's operation can be covered under our enrolment? So I'm guessing the question there is whether contractors are eligible as an employee, but if they're a contractor, my understanding is they wouldn't be covered. Is that right, Tom?
Yeah, that's correct. So they would need to be an employee under the employee relation rules, so engaged with your business and working in it as an employee, not as a contractor. So wouldn't qualify, unfortunately, John.
Okay. Kate, so as a business owner, and you've applied for a JobKeeper as the business participant, assume you don't have to pay yourself first to then receive the payment. So because you're not an employee, then you don't need to pay yourself a wage and lodge that through single touch payroll. You just need to nominate yourself as a business participant when you do that online through the business portal, and you don't have to pay yourself that amount of money. You should just come.
One clarification on that is depending on the entity that you are in. So if you're a partnership or a sole trader, then you obviously don't need to pay yourself a wage because you won't be an employee. If you were actually an employee of a company or a trust prior to 1 March 2020, then you would either register as an employee or as a business participant. So you would have to work out which way you've registered for.
Yep. It's a great idea to actually look at your business structure and see where, like say for example, a husband and wife, the husband may actually be an employee of one of the businesses, so then the wife can come in as a business participant, so you can effectively get it for both of you, which works quite well. Okay, Daniel's got a question. Can you explain what the one in, all in actually means? Tom?
Yep, so the one in, all in is sort of the philosophy or the ethos behind the whole JobKeeper program. It pretty much is that the employer doesn't have the choice of picking which employees they are able to nominate for the JobKeeper program. If you have any eligible employees, they all have to be given the option to participate. You've got to give them the employee notification form. They then have the option of either opting in or out if they've already got other arrangements, or they wouldn't be eligible because they're getting Job Seeker program, which is the Centrelink version. But unfortunately, it's one in on, all in on your employees. You've got to actually bring everyone in who is eligible, not just picking the ones that you want.
Good. Okay, we've now got a question from Christy. So with casual employees who normally do 8 hours per week, 16 hours per fortnight, can you legally ask them to now do 24 hours per week or 48 hours per fortnight for the JobKeeper money? I'm going to throw this one over to Jenny to answer.
Thanks, Amy. Yes, there's nothing to stop you from asking your casual employees to do more hours. That's effectively the very nature of a casual employment relationship, is you can have your employees doing different hours from week to week or day to day. However, there's no obligation for your employee to accept those extra hours. So that's, I guess, comes down to a conversation between you and your employee.
Okay. Now, Diana, how does an employee who qualifies under the rules force the employer to apply? That's a good one. Tom?
Yeah, so there is no forcing measure. An employer has to nominate to actually participate, and then they go and they offer it out to all their employees. But if you're an employee and you think that you qualify and your employer would qualify, you can't force them to opt into it. You've actually just probably have to have a discussion with them around that issue.
Okay. Now I've got one from Julia. So this is probably going to be a good one for Beck to answer. Can you tell me the best way to produce a payslip for an employee that does not earn the full $1,500 per fortnight? Do I put in their hours as worked and then show a JobKeeper allowance top up to take the gross wage up to $1,500?
So, Julia, you have answered your own question very correctly. That is exactly how you produce a payslip for an employee. If you're using a STP-enabled software and JobKeeper with JobKeeper functionality, they will have instructions on their website how to create the exact category you need. But then, just as you said, you put in their hours and show the JobKeeper top-up allowance to take the gross wage up to $1,500.
So I think the key message with the top up as well though is so the hours the employee is actually working will attract your superannuation, whereas the top up you don't actually have to put super guarantee on that amount. So you need to make that clear distinction between the two, and that's why there is a you need to separate it, and there's guidance out there how to create those payroll categories. Kate just asked if you know that MYOB is similar to Xero. Unfortunately, MYOBs isn't as good as Xero. I mean, they've still got out guidance notes on how to do it, but Xero's is just miles ahead, really. Okay, Daniel, we have staff due to return from maternity leave, parental leave. Prior to parental leave, they had been employed for 6 years. Do they still qualify? The answer to that is they would. They can't receive JobKeeper and paid parental leave at the same time though. So they'll just need to cease their paid parental leave and then they'll start receiving the JobKeeper. Okay. Okay, Charlene, how do I calculate GST turnover? Tom, did you want to answer that one?
Yep, so the GST turnover for the JobKeeper test is depending on, I'll take that back, sorry. So the GST, the calculation on the turnover is your total sales for that period. So say we're assessing the April month, we're going to take our total sales for April, excluding out any sales of capital items that aren't your business. So if you're not in the business of selling capital items like tractors or machinery or something, then you take those items out of your calculation. You also take out any transactions of intergroup nature, so where you're charging within your own entities. And that gets you your turnover for that month. But then you also need to look at, is your turnover more reflective on a cash or an accrual basis? So if you're in a services-based business where the work you're doing, you can sort of get billed for as soon as you've completed the job, then you probably need to look on an accruals basis with your reporting instead of a cash basis of when you're actually going to receive the money. But you do need to just check to see what's more reflective of your business and the activities your business does. The ATO's got some really good fact sheets actually on their website as to calculating the GST turnover and what to take in and out as well.
Okay, so Kay's asking, is there a minimum amount that a casual earns to be able to receive JobKeeper? What about students who are working casually? So for minors, anybody that's aged 16 and over is entitled to JobKeepers. There's no minimum amount of hours that they need to work in order to get it. You will tax them, I suppose, as per normal. Is that right, Tom? They wouldn't be taxed as minors.
Still use normal withholding rates.
Yeah.
Your eligible employees have to be over 16 as at the 1st of March this year as well. So if they're turning 16 in April, then they wouldn't be an eligible employee.
Okay. Diana, so do employees who have been stood down or only working minimal hours have to take annual leave on the days they don't work? Okay, Tom, did you want to answer that one?
Yep, so that one's probably more of a discussion.
Jenni? Yeah. Sorry. Jen's happy to answer that one. Sorry, Tom.
That's okay. I can probably help a little bit with that one. Under the JobKeeper enabling directions under the Fair Work Act that we introduced last week, there are some powers that employers have in terms of directing employees to take leave, and there's also some new provisions in the award. So check your award, make sure that that's there. They do need to keep, I think it's 2 weeks accrual, so you can't make them take all of it. Sorry, what was the question?
Sorry, I've gotten rid of it actually.
Oh, okay. Going to add anything else to that, Tom?
No, I don't think you've got it all, Jen. I mean, you can force employers to use some leave or ask them to, but you obviously can't force them to take all their leave. Where they've been stood down and don't have any leave or are casual, you will have to pay them the $1,500 a fortnight still.
Yeah, and I think you were about to say the other part is it comes down to discussing with your employees how you want to manage their leave while they're stood down.
Okay. Okay, so we've got a question again. Tina, do we pay superannuation on that extra amount? So with the top up, then no, you don't pay superannuation on that. It's only for what the person has worked. Okay, we've got Will. Different final dates for enrolment have been talked about. Is it next Monday or next Wednesday? I believe it was out till 30th of April. Is that right, Tom?
Yeah, so last week when we did our webinar, the ATO was saying that you had to be enrolled, had to pay all your employees by the 26th, which was the end of the April JobKeeper fortnights. They've obviously realised that it's a bit too soon to make everyone do that, so they've extended it out until the 30th. So as long as you've done your online enrolments, gotten all your employee notification forms back and paid everyone a minimum of $1,500 a fortnight for April by the 30th, you'll qualify for the April claims.
Great. Okay, so John has completed an enrolment, but he put in the incorrect number of eligible employees. How do you go ahead and amend this? Unfortunately, you can't do it through the business portal. Wish we could, but hopefully that will be an update. I doubt it though. We've had some luck in just calling the ATO, and if you get put through to a helpful person, they'll be able to change it for you. If you still don't have any luck, just get in touch with your accountant, and your accountant can probably give them a call on your behalf, and you can just update them. I'm not sure how strict that is though. It's only an intention. I guess we'll find out when you actually lodge your end of month actual figures. So, but in saying that, if you're way out, you might as well give them a call and update it. Okay, Daniel, if the employee does not want to do the extra hours, can they be given written warnings for performance or aptitude for performance? Jenny?
All right, so again, and this is for our national system employers, not state, and I've referred again to the job enabling directions that are possible under the Fair Work Act. And one of those is that an employer can request an employee to perform their duties on different hours or different days. Now, the employee can only refuse that request if it's reasonable. So I would suggest you have a conversation with your employee about what their reasons are for not, following that instruction or not willing to do the extra hours. If it warrants giving written warnings for performance or attitude, I guess it depends on what they're saying, but you certainly couldn't terminate them for that. You would have to have a performance management discussion around it, perhaps.
Right. Okay. Morris, please advise the date that eligible JobKeeper wages in April need to be paid so as to be able to be claimed in May. Great question, Morris. Tom, did you want to answer that?
Yep, so your April JobKeeper payments for your employees need to be made by the 30th. So April is the only month that we are allowed the extra little bit of time. So as long as you've paid all your employees $1,500 per fortnight for April by the 30th, you'll be entitled to claim the April payments in May once the registration opens. Going forward though, from what we can read, the ATO have been a bit vague on it still, but from what we can read, you'll need to make your your wages payments to your employees of the $1,500 a fortnight within each JobKeeper fortnight. So May is going to have 2 JobKeeper fortnights, one ending on, I think, the 12th of May, but it's on our resources guide on our website. So you'll need to make sure that you've paid that employee $1,500 within that fortnight to be able to claim it.
Okay. Now, we've got another question here just about the tax to withhold. Now, the tax is based on the gross. So if you're paying an employee the $1,500 top up, like the full $1,500 without them working, then you'll calculate the tax based on the $1,500. If the employee is working a few hours, say $200, and you're topping them up $1,300 to give them $1,500, the tax is still based on the $1,500, not on what they're actually working. Okay. Now, Kate asked a question about applying as a business owner in a partnership. You mentioned that you don't have to pay the partner a wage in order to receive the payments. What is required to account for these payments if successful? Beck, did you want to just mention about what you need to do to account for the money coming in?
Yeah.
Setting that up?
Yeah. So you need to, in your software, you need to set up an income account that is coded, the tax code needs to be not reportable, as is the income won't be reported on your VAS, but it will form part of your income. So no GST applies to the income, and it's just, you just have to set up one income account that says JobKeeper subsidy.
Great. Okay, Belinda, are leave entitlements only paid on hours worked? Yes, that's correct. So that's why when we have that separate payroll category set up for the JobKeeper top up, then your leave accruals will be based on what hours are actually worked, not on the JobKeeper top up. When you put it through the software, it's actually put through as a salary, so you're not actually putting in hours against that top-up payment, if that answers your question. Okay, so if you haven't paid $1,500, so you may have paid $1,100 for the first fortnight, can I go and top that up before the end of the month? So yes, you can do. You need to do that. You must do that. You've got to have paid $1,500 per fortnight by the end of the month.
Add in there, Amy. So April is the only month that we can do that in. So it needs to be, you need to be very careful going forward that within each JobKeeper fortnight. So I'd print off the list from our website as to when the JobKeeper fortnights finish, and make sure that before the end of each fortnight that the employee has been paid $1,500 a fortnight going forward. April is just our special month this time.
Okay, so do you have to pay employees their normal wage or salary, or can it be the $1,500 per fortnight? So really the minimum that they're going to get paid is $1,500 per fortnight. It's just how that's made up. So is it made up of a few hours they've worked plus a top up, or if they're not working at all, then you just pay them the full $1,500. Obviously, if they're earning over the $1,500, then you're going to pay them the same amount regardless, but you'll get $1,500 reimbursed to you after the fact. We've probably got a little bit of time left. So Beck, I'll just see if you can run through the bookkeeping setup for MyOb.
Yeah, sure. So firstly, the MyOb website has a really good set of step-by-step instructions. So if you still have some more questions, and you can probably go and look at that to see it face-to-face. MyOb are requiring you to set up 2 new payroll categories. So one is to indicate to the ATO when your employees have become, in which JobKeeper fortnight your employees have become eligible to receive the subsidy. And the second payroll category is to put the top up towards if you are needing to pay the top up. Now, if your employees are already earning over $1,500 a fortnight, you don't need to set up the top up category, but you still need to set up the starting payroll category. And this is a little bit, there's a couple of other steps, so I would suggest going to the my website or giving us a call and we can talk you through that. But as Amy was saying, it's an allowance that doesn't accrue super, so you need to take that into account when you're setting up the categories. And the reporting category for the ATO is allowance other. And it is quite important to set up these categories exactly right, so that when they go through your STP reporting, the ATO gets the right information and you can get your subsidy, you can receive it on time. Cool. So I hope that is not confusing.
Okay, so following on from Diana's question, Daniel asks, annual leave accrued. If the employee is employed full-time, but due to COVID-19 are now working 30 hours, so 0.8 of full-time and 8 hours stood down, is the staff accruing 2.92 hours per week annual leave full-time, or only 0.8 of the reflect the hours worked? I'll get Jen to answer that one.
So for your employees that have been stood down, they still accrue their leave based on their ordinary hours, is my understanding. Tom, do you have other opinion on that?
No, I think that's on the bunny there, Jen.
Okay, so if you don't have cash flow to pay the 2 times 1,500 in April, can you just pay JobKeeper for the second fortnight? Tom, what are your thoughts on that one?
Yes, so if you don't have the cash flow to be able to pay the employees for both JobKeeper fortnights in April, you won't be able to obviously access or to claim the funds back for both fortnights. So I would just make sure that at least one fortnight's been paid for the employees, so that you can access the payments for them. But it's possible to speak to the bank about some short-term funding or facility to try and reduce the cash flow cost a little bit. Otherwise, maybe have a chat to your accountant about potential other ways to fund it, or to look at it that way.
Okay. We've just got a couple of minutes left. We're going to probably go through a couple of final questions, and then we will finish with a quick little poll just to see how this went. First of all, there's a question just about where the JobKeeper money is paid to. So when you actually apply or enrol through your BAS portal, you actually do have to give them the bank account details. So those details are where the money is going to get refunded to. Do we have enough time to go through a business that's been restructured based on the new things that have come out now, Tom? Or should we answer that later on?
So the business that's been restructured, I can see the question there. Now, the restructure, it looks like in this question, is actually after the cut-off date, which would be the 1 March cut-off date 2020. So that one's a very tricky one, and probably a very specific case. There has been a whole heap of new rules introduced just today, which we're still waiting for the ATO to actually write up on their website, about where you've commenced business in the last 12 months, you've either sold off part of your business in the last 12 months, or you've rapidly expanded in the last 12 months. So the comparative period isn't relevant or isn't comparable between the two. So those rules are coming up on the ATO website. There's about 7 different ones that we can look at testing income with as well. So maybe have a chat to your accountant about whether or not you're going to pass one of the turnover tests.
Cool. Okay, so I think we'll wrap it up there. We're just going to pop up a quick little poll just to wrap it up. If you've got any feedback for us, we'd love to hear it. We will go through and answer the remainder questions that we just haven't had time for today. But thank you for coming along. Hope you got some questions answered, and we'll see you again soon. Thank you.